What is going on, guys? Welcome back to another video. Today we're going to be talking about ETFs that are heavy in Nvidia, how to get exposure to Nvidia by still having diversification. So the most popular ETF is, of course, the SPY with the most assets under management of $566 billion. That is what the whole ETF is worth. So another thing that we should point out is the NAV. What is the NAV? The NAV is the net asset value. So how do you calculate the NAV? You divide the net asset value by the number of outstanding shares. So most of these stocks do share a little bit above the NAV, about 0.5%. If you do want a spreadsheet, you can just take a screenshot or take a photo, or you can comment down below your email or text me on Twitter or whatever. I will send it over to you. We're going to be going over some of the main ones. We will not go over each and every ETF. So, of course, the most popular one is SPY. That is what everybody invests into. And the SPY, the top 10 holdings in the SPY is 33% of the whole ETF. So, first off, one of my favorite ETFs is the QQQ. So, how is the QQQ different? Instead of the SPY, which holds 500 companies, QQQ only holds 100 companies, or 102 to be exact. And also, for the QQQ, the top 10 holdings are 49% of the whole ETF. So we can see here, if you want exposure to NVIDIA, by holding QQQ, 7% of the ETF is in NVIDIA versus the SPY, which only has 6%. Also, the QQQ over the last year has outperformed the SPY by 1%. So not a significant amount, but it is more heavy into the Mega 7, into the MAGs, which if you're watching this video, I'm sure you understand their value and are wanting to invest in them. Another big thing to look at ETFs, and when you're buying ETFs, especially smaller ones, they will have a lot of hidden fees. So for example, right here, we can see the expense ratio. So when you're looking at the expense ratio, you do not want an ETF that holds 0.5 or more percent. That is kind of the average that I look for. Another thing to keep in mind is there are a lot of hidden fees, like management fees, and the management rewarding themselves with your money, which is one thing that you should look into before buying any ETF. And of course, the SPY, the QQQ, and these billion-dollar ETFs do not have a lot of management fees, which would just be exposed by the public and people would stop investing in it. If you want the most exposure to NVIDIA, buy the NVIDIA stock itself. Of course, you don't pay any expense fees. And if you look at all of these ETFs, the highest is up about 250%, but all of these are averaged now up 20 to 30%, some even lower. And while Nvidia in the last year is up almost 170%. Out of all these ETFs, there are two that stand out that we can go over right now: NVDY and NVDL. So these companies do not hold any shares directly, but instead they trade options, which takes a lot more time and effort, which is why the management fee is higher. But if you look at this, NVDL is up 257%, which is even higher than Nvidia. And we can see NVDY is only up 0.1% on the year. But if you look at this, they pay a dividend of 72%. So if you're looking for income, this would be something you want to look into. Another high dividend yield ETF that I really like is the JEPQ, JEPQ. They do hold a lot of NVIDIA. It's kind of like a QQQ or an S&P 500. It does have a lower share return, only of 9%, but in return, you get that dividend. You get a 9.5% dividend. If you are looking for a Canadian ETF, the only one I mentioned in this video is XStrip, xstrip.to, which is a semiconductor ETF that holds 8% of NVIDIA that we can go over later in this video. But first off, let's get started with NVDL. So NVDL, on the year, it is up 330%, and they do not hold any NVIDIA directly. Instead, they buy swaps. Swaps are like options. How swaps work is they most likely they don't go through the bank, they go through the company directly, and they say, if the company does this with the share price, I will buy this much. And it is more risky. This ETF would be for really big NVIDIA bulls, because if the NVIDIA does go up in price, this ETF will go even higher in price. But the bad side is there's a lot more risk, and you can see there's a lot more volatility, where it dropped 50% and then went up 67%, went down 32%. So there's a lot more volatility. This is not the ETF to hold for the average investor, hoping you will outperform the NVIDIA itself or the SPY. Take a look at NVDY, which pays a crazy dividend of 71%, up only a little bit on the year, but they did experience those highs very similar to the other ETF that we just went over. They were up 40%, and you still get that dividend. So if you look at what they're holding treasuries, which is pretty much holding cash, and they do the same thing more or less. They buy options in NVIDIA, and if it does go up, they make a lot more profit, and they take that cash and they give it back to the shareholders as a dividend. So if you're looking for an income, this is something more income-based investors are looking into. Let's take a look at MAGS. MAGS is one of the most popular NVIDIA ETFs that I've looked into. It has only 650 million assets under management. It does have a 0.29 expense ratio, which is a lot more than a lot of these other mentioned ETFs, but is still under the average. Again, they don't hold any of these companies directly. Instead, they own swaps. So again, swaps, like we mentioned, are a sort of options, and they hold a lot of cash, so they can cover themselves because it is much more riskier. So for the reason that I am not an options trader and I don't fully understand swaps, I would not recommend buying this stock for anyone who's in the same position as me and doesn't understand what is going on exactly. Instead, I would buy ETFs that actually hold equity in these companies. Look at SMH, another very popular ETF that I do like. For the last 5 years, it is up 260%. Doesn't have a very high expense ratio, has a very small dividend yield. And what do they hold? Mostly semiconductors. Of course, 21% of their ETF is in Nvidia. So this must be one of the Nvidia heaviest ETFs in this list. And they do own a lot of Broadcom and Taiwan semiconductor manufacturer. So it is a semiconductor ETF. Broadcom themselves, they are into cybersecurity, semiconductors, and AI. Go through SMH. If you look at the rating from 0 to 5, most of the companies are 3 and above. So they are looking like very healthy companies. Make sure before you buy any of the ETFs, you go into at least the top 10 holdings and see that you actually like the companies and understand them. XLK also looks like a very good option to buy. Its expense ratio is only 0.09. It holds almost 20% in Nvidia and holds 22% in Microsoft. Also has a little Apple. They are up 26% year to date, and over the last 5 years, they are up 160%. So, and they also own Broadcom, which is again semiconductor, cybersecurity, and AI. So we're going to wrap this video up right here, short and sweet. I hope this video brought you some value and that you found some alternatives to investing into, besides investing into SPY and QQQ. So thank you guys very much for watching, and I'll see you in the next one.